this is going to be a very important session for those who are specially sitting for the exam in July 21, the pre-scene that has been released by the institute. So, purpose of this discussion is to analyze pre-scene and to guide you about possible examinable topic. And as you know, this is a very challenging paper, open book paper, and even when I discuss, if you watch my last webinar, which is to discuss the previous paper, I very clearly mentioned to you the reason, examiners comment even, that students who would have taken this part, this 45% lightly without being very serious, then probably that is one of the reasons for poor exam performance. So, therefore, this discussion is going to really help you. Even you have a limited time for exam preparation, I really want you to focus. So, this lecture will really help you to focus on based on the pre-scene, what are the examinable topics from corporate governance, right? And as you know, that is about 15% of the syllabus. And then how do you connect this case study to auditing aspect, especially in terms of risk of material misstatement, which is 25% of the syllabus. And be aware, you have to be aware that this is the first time the revised learning outcome in relation to risk of material misstatement can be tested. And in addition, I am also using this case study to explain some of the questions, possible question from ethics, which is a 5% of the syllabus, right? And this corporate governance also include non-financial reporting. But based on the pre-scene analysis, which is a private business school, that we may not talk much about non-financial reporting, but I am going to not only discuss pre-scene, what is in the pre-scene, I will also help you to figure out how to connect this pre-scene to examinable topics in the syllabus as well as syllabus learning outcome, because end of the day, examiner is testing question based on the learning outcome. Every question has to have a connection to a learning outcome. So, therefore, from the pre-scene, of course, there are indications that this is a likely question, right, because it is being discussed in the pre-scene. So, one of the challenge that you will undoubtedly face in the exam, so why pass rate for this subject is very low, time management becomes absolutely a challenge for two reasons. One big reason is this is a multidisciplinary subject. While you have to have a time pressure to do your consolidation work and some computations and then interpretation of accounting standards, there is another essay type question where you need to write answers, especially when it is in online platform, that your typing speed, everything matters. That is reason number one. Reason number two, the fact that this is an open book examination. Right, if you unnecessarily try to read the books during the exam hours, it is going to be a reason for your failure. So, therefore, my advice for you, actually, before I wrap up this session, I am also giving you certain advices, right, that will help you to better prepare and to use that 3 hour, right, effectively. So, especially the open book, you don't need to depend on the book unless a question really connects, right, to a certain knowledge which you know it is in this page and you have read that page before the exam, then you better read it. Otherwise, if you have never read something that you are trying to search in the exam, that is something that you need to really avoid. So, I will recap those general advices at early stage. So, what I am going to do to make better use of this time, about 2 hours, right, I can now start reading para by para, pre-scene, but I am sure already you have read it. But now we have to make insights from the information in the pre-scene. For that purpose, I will quickly scan through the pre-scene, and then I have done my own analysis of what are the critical information in the pre-scene that you are going to most certainly connect to some unseen questions, most certainly, right. So, that is the careful analysis you have to do, right. So, therefore, after going through the pre-scene as it is, let us come to the analysis to see, okay, what are the most sensitive sentences in the pre-scene that is likely to be connected to unseen question, and what that unseen question would be, right, to be mindful, and will certain pages from any of the books be helpful for you. So, those are also to be discussed, right. And then finally, we will also look at some of the basic analysis like analytical review in financials to see anything unusual we should be aware, and finally we will conclude the session with some key advices for the exam. So, let us do the first activity, that is to go through the pre-scene in detail and then to come to possible exam questions. So, I will open the pre-scene, and I already said you would have read this many times, no doubt, not only for ABR, all the papers, from all the papers based on this single pre-scene. Therefore, our attention should be on certain matters which are much connecting to this learning outcome that I mentioned. So, as you know, it is Manilal de Soisa, the founder of the company, and this was grown as a family business, and they formed this company called CBE, and they have branches in different places. As I told, I do not read all the information, right. And then most importantly, you can see this is a family owned, even family governance structure, where the wife Rukmani and two children, that is son Jagat acting as wife is acting as the head of academic activities, and Jagat and daughter, his son Jagat and daughter Lakshmi, right, they are involved, and there is organization structure. You can see the role that they play, and Lalit is also a shareholder of the company, and he is a businessman, and he is now, one of the information in the pre-scene is that he is going to he wishes to sell his share. So, this probably when he wants to sell these shares, at the same time case study also indicate there is another Chinese investor who may be interested to purchase. So, this is a likely scenario from the pre-scene where examiner can either say that somebody is going to sell, or a new investor comes and the new investor may not be happy about the current governance structure, things like that. And Jagat is keen in expanding the business, and this is another possible scenario where this private company is going to be a listed company, and we see these all family members being shareholders except Lalit, that is 40%, right. And the HR practices of the company is described here. You must carefully note some of the risks that this company has. High turnover. Now, this paragraph is important because see, when it comes to our subject, the area that I am talking, you may need to analyze the control environment. I am discussing this in more detail later. When it comes to control environment, remember HR is an important aspect of control environment. In audit instance number 315, the control environment, the relevant section for this is the attraction. If I add a comment here, that is about when you analyze the control environment, the area is attraction, right. Attraction, it is not only attraction, you have to retain, right, promote, retain talent, so the competence, competent individual, right. So, that is a very important objective of internal control system, that is why it is a part of control environment, right. So, now if you read this paragraph, what you can see is that there is a high turnover among finance and IT, right, but the academic staff turnover is now, especially finance and IT turnover is not a good indicator. We have to see why. The higher turnover was due to certain alleged fraud that brought to the notice of management in relation to revenue, and now that fraud risk is going to be a critical area that we need to study in this case study, right. Fraud risk, and the area also known to us, the area is revenue, right. And so, this is a big area to focus. And then that I will explain to you how this connects, what topics and so on. A lack of work-life balance is a common grievance. Nearly 70% of the staffs are male and employees are subject to annual informal appraisal system where the performance is not linked. Now, here you will find another issue because it says performance based incentive scheme is not there, right. So, now if people's remuneration is not linked to KPI, they may not be motivated to perform, right. And then it also says lack of written policies in college in general has led to non-standardization of many processes. So, this tells us another two issues. One is that the KPI matter is very important because, let me to add that comment as well. Yeah, so now here you can talk about KPIs not being aligned, right. KPI is not being aligned to remuneration, so that employees are not motivated. And the other big issue is when it comes to policies, there is lack of written policy. Remember, it is, you can connect this to corporate governance. One of the important board role is to allocate time, right, on policy making tasks, because that policy framework enables company to run the operation, right, because without policy framework, how do you govern? So, that is the major weakness that you can connect this to role. Or now see, a wise student, intelligent student, or a student who is well aware about the syllabus learning outcome will see, isn't this a part of role of the board? Now, there are 4 critical roles that the board of directors should play, and if you do not know what are these 4 roles, you have not carefully studied corporate governance, right. So, the 4 critical role of the board is, one, that is strategy formulation, right. So, strategy formulation is all about looking ahead in the context of external environment, how company is going to compete, what is the strategic long term plan. And once they got a good strategy, they need to have a policy framework to put those strategy into action, right. That is where the policy making comes. And the third important one is, once there is a policy framework, it is very easy to monitor the governance. That board can monitor or supervise management. That is monitoring and supervision part. And finally, the board has to be accountable. Now, see, especially when you read corporate governance related, or when you study corporate governance related learning outcome, you have to have a very good understanding about these 4 critical roles of the board of directors. And why I am explaining this now, because as we go through the case study, you can see many issues in relation to strategy as well. And now I am connecting this to the KPI matter as well as the lack of written policy, and then they are also talking about the VRS scheme that is proposed. And then this company has foreign faculty, especially for final year students, and they receive scholarships to pursue their doctoral programs, foreign faculties. However, yeah, then these are general information. Company is bound for research, well known for research, that is a good thing. Jagat has been instrumental in setting up a JV with some leading private sector. There is annexure of the profile, the products, the company's main products, undergraduate, postgraduate, professional education and short courses, and then the percentages are given. Now, again, this is the area possible in the exam, especially for the auditing part, right. Now, there is something called that you have learned, there is a separate chapter in your study text called analytical procedures, right. And out of these analytical procedures, it's one of the very important way that you can use in auditing analytical procedures for risk assessment. to see what are the risks that the company is exposed to, and also the analytical procedure helps you to develop expectation about what is going to be the revenue. Especially this is important when analytics are used as substantive procedures, but then you do not need to worry about going to a lot of details of auditing when it comes to further audit procedure, which is not a part of your syllabus. But in analytics, if you want to develop an expectation of what should be the revenue, it is possible, because you know the breakdown and you know the number of students, 9,000, you can break them into these categories. And if you know the average rate that you are getting, and that accounts for 90% of your revenue, and that is how you can establish what should be the expected revenue, right. I am just giving you those information, you know, that if you have numbers, it is possible to kind of estimate revenue, and why that is important in auditing, right, or the analytical procedure can be used as a tool to develop that expectation. And then in this paragraph they say all the courses that are franchise are subject to academic assessment and regulations of the awarding body. Due to affiliation with international partner universities, the college has access to foreign faculties. 20% of the enrolled students follow degree program in those universities. Main revenue sources stated above, the college earns referral fee as well, right. However, certain programs are rolled out without a stringent evaluation and approval process by experienced academic staff. Now, that by looking at all these comments, one thing which is very clear is that if you remember, if you look at their business model, now remember this business model word is also used in integrated reporting. The business model, in their business model, one of the important critical success factor is to ensure quality assurance, right. So, the quality assurance is their main business, is educational services, and if they do not follow certain standards, right, especially in relation to these foreign programs, as a result some students may not continue, and that will affect their reputation, right. And then actual profitability of the company differed from estimated at the outset prior to launching the programs. The finance manager was therefore asked to do a variance analysis. Now, that is another hint in the pre-scene. If an examiner wants to connect this piece of information to a case study, again we can use this analytical review, right. Even if you are doing a variance analysis, right, it can be a part of analytical procedures, right, part of AP. Variance analysis also can be a part of analytical procedures, and imagine if you have been asked to do such analysis and give a report, expect if such a question is given, you can be easily aware to see. Even now you have the accounts of this company, financial statement, and see, you can already do a variance analysis before the exam and see what is unusual. I will show in a little while their numbers. You can see that the GP margin, the sales has increased about 32%, the GP margin has increased, some expenses have been unusual. So, this unusual pattern of expenses may have affected their profitability. Now, this is something you can do before the exam, right, some variance analysis, because the pre-scene talks about it. And company achieved the highest revenue in this year. However, the revenue was short of expectation. It was also revealed at one of the directors' meeting that the budgetary process, right, and strategic allocation of resources was weak, and hence the expected targets for revenue and cost could not be achieved. The Manilal, the chairman, proposed to obtain a service of consultant to resolve. Now, that consultant story is very important. Perhaps you may be the consultant who is supposed to analyze the governance issue. Right. Now, in this paragraph also we are noting a very important sentence. Now, you see, whatever I am writing are the areas that you need to be well prepared. You can either highlight or arrange it in such a manner that you can, without reading the entire pre-scene, this information you can connect to a learning outcome. For example, my previous learning outcome, if the board role was to be questioned, right, role of the board, then this information again tells us a bit of role when it comes to the policy, right, as well as monitoring, because you see a company can have a policy to ensure that expenses need to be controlled within the budget, right, and then also budget is a tool to allocate money to certain projects, right, that connects back to strategy formulation, right. So, therefore, if they do not have budgetary control and resource allocation, that is going to affect both policy and monitoring role of the board. As a result, the company, one way is that there may be issues in not allocating adequate funds for strategic initiatives, and then the other way is not being able to control expenses, right, and that would have affect the profitability. So, likewise, you know, this is a critical information, and during this financial year company approximately they are targeting 1,200 million, and this is an increase and sizable increase. Once the building expansion is completed in this year 21-22, sorry, this year mean current year 21-22, revenue is expected to increase by 10%, 20%. Now see, but logical student should ask, because this case study also talks about somewhere I think COVID context, because of the current environment that we are operating, right, is it possible to recognize? For example, now see, another area that you need to be mindful in this syllabus is the risk management. It is the role of the board of directors and especially even non-executive directors, right. If you take, if there is exam question to identify business risk, you will certainly identify one risk, that delay in completion of project, the expansion project may affect expected revenue, that they are expecting 10% increase, because obviously you know, delay in completion of expansion of the project. Now, this delay, the reason for this delay can be COVID, because of COVID the construction can be disrupted, things like that, you know. And then this you need to see another possible exam question is, if there is a business risk, what are the ROM? Very important, extremely important to know the connectivity between the business risk and ROM. And I am asking you as a student who is preparing for the exam, are you able to explain a business risk? Business risk means it can be arising from significant event, condition, company's action or inaction, right. That means action is you are doing something, inaction is say you are not doing anything to continue this program while there is a COVID, you have to have online learning platform or something to continue. As a result, there is a business risk, right. Now, this event, condition, action, inaction is going to affect business objectives and ability to execute strategies, right. That is how business risk can be explained. So, most business risk, right, most business risk will have most business risk will have financial consequences, I am explaining now. If there is exam question, how to explain. As a result, may result in risk of material misstatement. A good example is what I told you now. Because of this COVID matter, the delay in construction, now what issues can be affected? Now let us see. overall we are talking about completion of a project. So, the risk number 1 that we need to ask, capitalization, right. For example, the capitalization, the possibility that the revenue expenses may be capitalized. That is a inherent risk when it comes to any project, but more specifically what may be applicable for this case study, as you know, they are taking significant borrowings, and because this is a qualifying asset, borrowing cost can be capitalized, but remember usually the capitalization can be suspended, right, during the extended period in which active development can be interrupted due to COVID. You need to ask those questions. And then how about, this is for borrowing costs, right. How about the depreciation, right. Now, because this company is under pressure, the profitability issue, all that, now they may defer depreciation, but technically speaking, if the building is ready for use, the depreciation has to start. Now, those issues you need to look at in terms of financial statement, while there is a general issue with the building. Now, that is how you need to analyze a case study in relation to this subject. And this is the story, the same thing about more detail about the capexes. The college is investing, right. The college is investing in the construction of a new building to expand the business. The student capacity has increased by 100% when the construction is the same thing we discussed. There is a 6 billion loan to be disbursed in stages at a concessional rate of 8%, right, in 17-18. So, this is effective from this date. So, you have already taken the loan. If you look at the balance sheet, you can see there is a significant loan, and this company's debt ratio is relatively high, and you can also look at the ability to pay the interest. That is a business risk. Now, another business risk would be the ability to settle their, the liquidity. Are they able to serve their debt? And eventually can there be a going concern issue, but by looking at the current numbers you can't say there is a serious going concern issue, but then there can be indicators of going concern, right. And that is where you need to look at numbers critically, because there are borrowings increasing, there is a OD in the balance sheet. I can go to Excel and show those numbers, whether there are indications of going concern we need to look at. But then right now we can't say this company's financials are really unhealthy, we can't say that, right, because this company is currently profitable, right. And the only thing is there is significant debt that is being accumulated, and the challenges that is going to foresee. The final loan also come in. Now, the loan disbursement, final one is this year, current year, and the loan repayment will start. So, whether if company has a liquidity problem, the repayment of the loan, and logical student will ask, when there is such a significant loan, right, can there be a business risk, right, in relation to compliance with what? Whenever there is a loan, right, the loan will come up with lot of restrictive condition, right, those we call debt covenants. Compliance with debt covenants, and especially if there is a breach of these covenants, what are the implications? Imagine if the bank demand that the loan is loan implication, right. Now, if the loan is immediately payable, if there is a breach, then that can create a big uncertainty, and that may lead to a going concern issue, perhaps if the company is struggling to do that. Construction was delayed, this could adversely affect the opening, and this is a risk that we already identified. Then IT. Company realized that it is ill prepared for COVID-19 in terms of not being able to deliver its program using digital tool. This is a big risk, right. So, now this is where the strategy comes. The strategy has to change with COVID-19. Therefore, it plans to invest In an integrated digital learning platform, when moving to a digital platform, it is inevitable that there may be excess staff that need to be looked at. The automation and new branding strategy would need to be formulated with greater focus on online distance education. The finance department has also been experiencing issues with regard to generating reports required for management decision making. The audit carried out by one of the international university revealed serious vulnerability relating to cyber. Now, this paragraph has so many, lot of points for you to note. Now, let us note them carefully. I am sure that you are also noting these points carefully. One is one issue that we have is a failure. We can highlight this as a role of the board. Right, what was the role of the board in strategy? The change in the business model, right, because there is a change in the business model, and then company is not ready is a main risk. And then we can question whether the board has done this role properly. The other issue is that which is given here, the information system. Now, they say that the company's information system are not able to generate reports for management, and sometimes this may affect company's control activity. If there is exam question to analyze cause of I components, you can connect it. This can affect control activities, right. That remember, information system is a part of course of 5 and control activity is also another part, especially one of the control activities called business performance review. Now, some of you who are watching this, you do not know what I am writing, maybe because you are not very thorough with the internal control. Now, business performance review means, for example, they are supposed to review a debtor's aging, right. Now, that report is incorrect, meaning the management cannot properly exercise that control activity. That is the point that I am making. Another example where the board has failed to manage risk is risk management. Again, role of the board is that this cyber security issues, cyber is not managed properly, and also business continuity plan is a major risk management tool, especially remember when there is a disruption, company has to have a business continuity plan, right. So, that is that. And then we see the governance issues. Now, this section again extremely important because it has been specifically worded in the exam as governance issues, right, which means governance is a part of your syllabus. As the company is a family business, the directors lack independence, expertise. Family owned directors lack independence and expertise in ensuring that the governance process have been keeping pace with the expansion. The chairman expects senior consultant, you may be the senior consultant, to give recommendation to address the deficiency in governance risk and GRC. Jagat is promoting the listing in Dirisavi board. Now, this and the staff is competent enough to effectively discharge, ensure that the staff is competent. And now, this para tells us again another possible kind of exam scenarios, right, where you can think here is what? One is the board weaknesses at the board level, right. So, we can even question board balance, right, in terms of board balance as well as diversity, whether there are right board members, and then as they very clearly say independence. All these questions, topics you need to be really aware to handle in the exam, and I will explain to you in my analysis. And the next is so overall they say the board does not have that experience, consultant is going to give a report, and these specific bullet points are given to you. I will take this down so that I can write more about this point. Lack of finance and risk management experience at board level and lack of independent deliberation on key decisions. Those are two major weaknesses in board of directors conduct, and very likely these bullet points you may be able to relate to any unseen question, but usually this can be connected to the role of the board, where even the composition of the board, right. So, not having risk and finance exposure is a major issue. Not having risk and finance expertise in the current board is a serious issue, as according to corporate governance code, at least one board member should be what is the word we are using? Financial. They should have financial acumen, expertise in finance. And then lack of deliberation, which means key decisions are not deliberated, another board weaknesses. If key decisions are not deliberated, especially examiner can ask you a question about how to improve effective decision making. I hope you are right in this exam question, right? How to improve effective decision making by the board. So, there are, especially in your study text, the Higgs report recommendation, right, on improving decision making. That is, for example, there should be a high quality documentation. What is the practical meaning? Do not read anything without a practical meaning, right. So, to make sure that decisions are deliberated or the high quality decisions are taken, you need to ensure that the board papers, if there is a decision for a digital learning platform, the board paper explaining how this is done need to be circulated to members before the board meeting, so that they can read and come, and sufficient time is allocated. And at the board meeting, right, we should avoid domination by Manilal, because he is CEO and chairman. The different views are considered. Currently it is difficult because there are only family related members, and most importantly, if you want to get expert view, you need to get. Now see, those are really examinable points if examiner wants to get into that level of detail in board decision making, and also it is in your study text, right. So, please go through. The decision making is a separate part. And then possible non-renewal or termination with university. Now that I am writing as a major risk. Now if examiner wants you to identify business risk, this is another major risk, non-renewal. Non-renewal is a major risk, termination, right, likewise. So, these are major risks. And lack of strategic initiative to address increased competition. Now, you see, this is a big point to my earlier issue of board role in strategies. If board is not having strategic initiative to address competition, price war, the board is failing. And then no quality control measures, I already touched this point. No standard operating procedures, again they are weak in policy making tasks. Lack of online education platform is another area board has failed to allocate money on strategically critical area. Poor employee engagement. Now, this list suggests failures from the board in relation to their governance role. Then another interesting issue, unethical issue itself, examiner has given, meaning you have a 5% syllabus coverage on ethics. If this area need to be tested, I mean this information may be very valuable. So, compliance with applicable contracts, MOUs with the partners are important, and there have been few complaints to the regulatory authority that the standards of this company have dropped, and it is questionable whether quality review mechanisms are implemented, and if so, they are effective. Although compliance reports are sent to partner organization regarding the effective functioning of QA process, inability to maintain required quality standard is a breach in terms of the MOU, and it would lead to negative, significant financial and non-financial repercussion, which means this is another major business risk. I already mentioned this. The business risk is You can even call this as a reputational risk, you know, it is not good for the company's name. And what is the reputational risk? This is arising from non-compliance with quality standards, right, and non-compliance with quality standard, and how this is going to result. Now, they have said this is financial as well as non-financial repercussion. Financial consequences is a drop in revenue in future, obviously. In addition, there can be, you know, penalties, right, or claims which may lead to contingent liabilities or a provision. That is how, if examiners write ROM, business risk and related ROM, this is how you can again write this answer. FIM investigation related to breach being conducted by partner university. Now, see, some investigations are happening. This was discussed at the meeting and they are trying to recruit somebody, and then in the past 3 years finance manager has changed twice. That is a major issue, right. I am writing this under the heading of control environment. Remember, I mentioned to you out of control environment, one thing is integrity, culture. Now, we can control in auditing standard number 315, they talk about culture which focus on integrity and ethical values of the board. We have a serious question, especially where the finance, if the board influence in what? Professional judgment, board influence in professional judgments of finance team, right, is a main raise, right, a doubt about management integrity, right, because the idea is to, you know, probably to make fraudulent changes to financial reporting, and that is very clearly given that the accounting for learning management system, whether to capitalize or not. So, they are pushing maybe to capitalize some of the expenses which may not require capitalization criteria. In that context, examiner can ask you another question, that is a syllabus topic, which means what is the syllabus topic there? The ethical conflict resolution, please write down ethical conflict. Now, what you are going to do? Ethical conflict resolution, and it may be examiner can connect this to NOCLA, right. Now, if it is ethical conflict resolution process, you should know, okay, now here in this case the finance manager is going to talk to the institute ethics committee. But before that, normally under ethical conflict resolution, you need to look at what are the facts. Even AAA model, you know, when you read the study text, you can use AAA model, American Accounting Association, or even our code of ethics addresses this. When there is ethical conflict, you have to first look at, you know, what are the facts in the case study and what is the ethical principle that is going to be affected. And then obviously, after that you need to discuss with the management, you know, why this is done and request them not to do things like that. And then if they are not listening to you, you need to discuss with the next level. Next level may be the board of directors, right. If the board also not listening, you may want to talk to CA Sri Lanka, right, or any other external party, right. And then if that does not work, you need to see what are the other alternatives available. Alternatives is to say what they do or not do, right, say do or do not. And then what happens if you do not do what they say, you will lose your job. So, then you have to look at the consequence of each option And finally, please go through the study text. This is area, what I am saying is, if this is tested, you should know to apply ethical resolution model, right. So, after evaluating consequences, you may decide what is the most appropriate one, and practically, if you do not have a solution, you may decide to resign from the organization. So, like that, you should be able to build a logical answer if examiner test, ethics. And if it is a NOCLA, you see where there is a case study given saying that this company has violated some laws and regulation, right, in relation to education, or it may be university grant commission, some of the legal requirement has been violated, and they are doing education in such a manner that is going to affect the exam or result in somebody getting a qualification without following the process. That can be a issue with public interest even, right. Now, if this degree is a medical degree or something like that, and then there is a issue in paper marking and there is a serious question like that, then if there is a NOCLA, your duty is, okay, number one, you need to understand what the problem is and discuss with the management why you are violating this, advise management not to do that. If management is not taking any action, you have to see what are the further actions that you are going to take. One of the further action would be inform the regulator, because management is not listening to you, and especially this becomes relevant when it is a public interest topic. Like I said, the education, I connected in example how this can be related to public. And as I told you, UGC which recognizes offered by CB has received many complaints about the academic appeal and misconduct of the college, which means there is a serious case, and even NOCLA may be applicable in that sense. And now, numbers argument is very important. Remember, another thing in the exam is you to look at variance analysis, right. But I recommend you to do at least your basic analysis, how revenue has changed, what is the percentage of increase in this to this is very unusual, I mean significant. And if you look at the GP margin, I am sure this to this is significant increase. And admin cost, has it been now as a percentage of revenue, whether admin cost is likely to be overstated or not, and what is the nature of other income. This finance income also significant, but finance expense may relate to the loan, whether they have included this loan we have to check. And there is a big item called OCI. In the OCI, we need to really see what this OCI means. Is it relating to fair value through OCI financial instrument? And most certainly you see a big item which is definitely a ROM called revaluation, right, that you can write in the answer. I will explain to you when it comes to possible exam questions, right. And then accounting and finance department. Company currently uses two application software package. Remember, now when they talk about the software packages, you have to remember COSO framework and connect this to information system. A bespoke package is used for operation, which was used by the college a few years ago. Bespoke means like ready-made. However, the programmer of bespoke package, sorry, the customized one, the bespoke programmer has left now, therefore making new modification to the application has been an issue. So, there is a serious issue about this operational software. One is there can be internal changes which may be done, and sustainability, because the person is not there. An application software is issued for accounting and it is a two-tier ERP package. The billing and bank reconciliation in the ERP have not been utilized and the bespoke operation is not integrated. Now, here again you see some issues, right. The issue relates to information. In control environment, we call it information system and communication. So, what are the issues you have? One issue is that ITGC and application control, you are really worried, especially on what system, that bespoke, because the programmer has left. And when we say ITGC, where possibility of program being changed without a proper process. And then We also see this is not integrated, that again you need to look at what are the implications. Despite having ERP, the fact that it is not fully used, the ERP not fully used by the management, it is not a lack of interest to learn the ERP was evident during the deliberation. So, that again question as a part of control environment, right, management competence and commitment, right, because if they are not using the ERP, that is a serious issue that can affect financial statements, reliability. The management has requested staff to come up with a cost reduction plan. External audit has few concern about maintaining proper minutes. Now, that is the big point in relation to governance, right. Board minutes is essential to make sure good board governance, especially this is for the board to follow up, right, as a part of board monitoring role. And then the previous year, now definitely if examiner asks about risk of material misstatement, you can talk about impairment. What was the last impairment of receivable? Has it been accounted or not, right? And in addition, the FAR is not there, is another deficiency in control activities. So, like that you can comment on that, and then the company is registered for that purpose. And then we have the balance sheet. When you look at the balance sheet, the PPE balance is significantly high. This may be due to their expansion, and the intangible asset may be their learning management system. And then inventory, we need to ask, this being a software or the business school, why there is inventory and what is this inventory. And most certainly I told you financial asset and amortized cost, right. What is this asset? Does it meet the amortized cost? Can it meet the classification according to SLFRS 9? And trade receivable, definitely you have to write a risk of misstatement. Why? Because that is called impairment risk that was identified by the previous auditor. And if you take the cash position, there is some deterioration, and companies aggressively spending funds on the PPE. Then stated capital and revaluation reserve is a significant amount. This is definitely a risk. Deferred tax liability, borrowing cost, retirement benefit, and this is interest bearing loan, and you see the size of the loan is really significant, that can affect their debt, and this also increases the finance risk for their ability to serve the loan. And then there are payments for constructors and trade payable, all that. Then in addition, you have been given a 5-year forecast, then you can see how realistic some of these figures, the financial benchmarks given, the profile of the board. Now, one of the main governance issues is that CEO and chairman are the same, and if examiner asks what are the potential issues by combining these two roles, you need to have answer. For example, one answer is conflict of interest, and you should be able to explain what the conflict of interest. For example, chairman is more interested in business issues, fixing business issues, and he may not be interested about stakeholder issues such as partner organization. And then non-independent non-executive director. So, Lalit is a non-executive director, but he is not independent. So, which means this company does not have independent directors, and his expertise also similar to other board members. Econ, in terms of board diversity, right, Rukmani is the wife, and she is head of academics. She has only BSc degree. And director international relation, of course, has marketing experience. Then dean is also qualified in different areas, that dean, and likewise these are the the board members. And this point is very important, because one is that CEO chairman is not separated. Secondly, they do not have adequate independent non-executive directors, and even non-executive directors are not enough. And if you take Jagat, he is the executive director business development, and then there are other people in the management team, and again if you look at the qualification of especially there is no finance director, there is something you should notice. Now, especially if you look at this chart, obvious governance weaknesses you can identify. One is that there is a head of direct academics, that is fine, business development, but finance manager has to be, at least there has to be finance director, ideally say CA qualified somebody. This under this finance manager you can have other ones, and again we do not see in this structure is there an internal audit function or not. Then there are other administrative and HR, again we do not see there is a board representative for HR, no, right. And of course, this part is very much relating to industry, you know. This is not very pertinent to case, but just be aware by doing a one time reading. So, now we are going to see what I did is to look at the pre-seen information, right, and I also told you that I can show some of the unusual numbers from financial statements, right, especially now this is a basic analysis that I have done. So, this year increase in revenue is 32%. Now, the question is, despite challenges they have, how are they able to report a revenue of 32%, which appears to be significant. And the other issue that is there is that you know, while there is an increase in direct expenses by 26%, right, this year direct expenses has been increase only by a very small percentage, right. So, while the revenue has increased by 32%, right. So, we do not see a correspondence increase by direct expenses. So, there is a possibility that the direct expenses may be overstated. This can be, you can write this as a risk, there can be unrecorded liabilities. Why? Now, this direct expenses may be lecture payments. The lecture payments may not be recorded. Why? Because there are fraud risk in this case study. There are fraud risk indicators, right. Because of that, company may not be recording some of the expenses at the year end. So, those are very valid questions that you need to ask. And then obviously, GP margin is very unusual. That is 55 from 40, and if you look at last 2 years, it remains at this range. And here is a sizable improvement from the NP margin. And then, like I told you, the revaluation is definitely going to be one of the ROM that you will identify in this case study. And even we have a question, what is this OCI 1 million, whether it will meet the criteria for OCI. And then in terms of the balance sheet, if you look at the working capital ratio, you can see this, there is a significant working capital in this company. The settlement period has increased, the current ratio is decreased. And so, these balances are given. I think now we are in a much better position to connect all of this information. So, what we did so far is to go through information, and now we have gathered lot of information. In the interest of time, during probably next 1 hour, but I am going to show whatever I emphasize, and in the PDF I made some notes. I have taken all those points to a Word document, and I am also showing you possible exam questions and telling you that what page numbers you need to focus, right. How do you connect theory to the pre-seen cases and write answers. So, that is what we are going to do. So, what we did so far is to analyze. I could have straight away come to an analysis and shown you, but as it is from the pre-seen, we went through and I showed you some of the numbers which are unusual, like the revenue increase, the GP, and the direct expenses is unusual, right. So, Now, what I am going to do, the most important part, to guide you, right, during the balance remaining few days, right, for you to properly prepare for some of the possible exam questions based on the information in pre-scene as well as the exam learning outcomes. How should we prepare? So, I will also take this time to really focus on risk management, the risk of message statement part as well with the learning outcome. Now, you can see this document, right, the risk of message statement part there, right. Now, if you are a student preparing for the exam, the first document that you should go through is the learning outcome, syllabus learning outcome, and every learning outcome you need to understand the meaning, right. Now, assess the risk of material misstatement during the audit using the risk assessment procedure. Now, what does this mean to you? Assess the risk of misstatement during the audit using the RAP. So, now you need to understand RAP, risk assessment procedure. With that, you are able to highlight either inherent risk or control risk, right. So, that is risk assessment procedure. And then what is the inherent risk and control risk? Now, if you take in this case study, we can say that is where you can prepare for answers now itself, right, revaluation of PPE. Then you need to explain why do we think that this is a significant risk. One is to say you can connect, a logical student first connect this to the fraud risk, and if you look at the auditing standard, there are in the new auditing standard there are what is called IRF, inherent risk factors are given. So, one of the inherent risk factor is fraud risk especially which is coming from management bias. Now, you can explain management bias in what ways? Now, for example, remember in the pre-scene it was mentioned that this company is going for a Dirisavi board listing. Now, when they are that one of the new investors is going to come, because of that there is a management bias to overstate the asset value, right. As a result, revaluation may not reflect the actual fair value, revaluation may not reflect the real fair value of the asset, right, fair value may not reflect the fair value. That's one IRF factor called management bias, right. Another IRF factor that you can explain is the subjectivity, right, or the complexity and subjectivity. Now, what can you write under that to say that the revaluation, right, requires fair valuation of PPE, right, revaluation requires fair valuation of PPE which require, right, subjective assumptions, right, and judgments. And also, if you look at the accounting standard point of view, we need to check whether all assets, all related assets, you can't do selective revaluation, all assets have been revalued, the particular class of assets, all the assets in that class have been revalued. And in addition, remember now this is the beauty, this subject connects the accounting standard with ROM. The other accounting standard implication is to us, right. Now, you see what I am doing is I am taking one of the learning outcome and connecting to the pre-scene. The whether deferred tax, right, has been considered, has been provided on revaluation. Now, these things, and then another question to ask whether depreciation is based on the revalued amount. Like that, you can keep asking some question because these are likely area which may not be properly reflected. Now, if you take the next learning outcome, that is assess risk of misstatement, right, at financial statement and assertion level. Now, in this learning outcome, the difference between financial statement and assertion level is highlighted. So, I want to ask you one question, can you give me from the case study reading that we did, I think I have written already the answer. One example of financial statement is that is a governance issue. The CEO chairman is the same, right. Not only that, we have many issues relating to control environment, and then one of the very specific risk in control environment, when one person is dominating, that person can override control, and then as a result there is a financial statement level risk. When it is financial statement level risk, idea is that it can affect, it can potentially affect many assertions, right. So, that is the idea of that learning outcome. Now, this is how students should carefully read, and during my pre-scene itself I explained to you business risk. What is a business risk? We discussed, we took the example of COVID, we took the example of delay in the business school, and then we delay in expansion, and then we connected it to Rome, right. And then it is very important that you remember these 3 fraud risk factors in this chapter and auditing standard number 240. In a case study, you should be able to identify what is the incentive to manipulate, are there pressure to manipulate, and are there opportunities to manipulate, or are there rationalizations. That is, rationalization means basically it refers to kind of ethical, unethical practices, right, opportunities, rationalization, things like that. So, those are fraud risk factors, be aware. And then if examiner talks about the audit, because the audit is going to start and comment on materiality level. Now, audit partner is going to have a discussion about the materiality level, then you should be able to comment, for example, what is OML, overall materiality level, and what is the appropriate basis, is it profit before tax suitable or not, is it the profit or revenue. So, like that you should be able to connect, and I told you analytical review can be tested, because they can say with the revised learning outcome, now audit partner is doing audit and you are going to do a risk assessment, and how are you going to use analytical procedures to identify risk as well as frauds, right. Now, this is where I mentioned to you we can actually do a basic analytical review, and I also covered, if you want, you can develop an expectation for revenue, right, to see whether their revenue can be unusually high or not, because why it has increased by 32.5, we are not very sure, because with the COVID the numbers would have been hit, but how company is still achieving 32.5. Then if examiner can easily test even in this pre-scene COSO, right, internal control framework, components of integrated, now these 5 components, right, you need to have a good understanding about control environment. I mean, lot of information in pre-scene talks about control environment, explain the control, and this was tested in the last exam also. Control environment refers to governance and management functions. Then your AAA comes. What is AAA? It is about the awareness, attitude and action of the management regarding two things, regarding internal controls and its importance. Now, see, like that, a confident student without looking any book will stick to some basic explanation and cover all the answers within 3 hours. And if examiner is asking you to comment internal control weaknesses, there are many weaknesses that we discuss in control environment. Specifically, you can talk about integrity and ethics aspects. Then you can talk about governance aspect of the control environment, that is where there are no independent directors, right, and then the role, no independent directors, as well as their participation in governing is not that great. Participation in governing, right, is not adequate. Why? If you look at bring evidence from the case study, right, the board deliberations and regular review and board minutes, those issues are already like board minutes related issues, you can see like that you should be able to comment, right, integrity and ethics, governance, and you can certainly talks about, you know, I refer these all as GACA in the new auditing standard language, right, GACA. So, again there are triple A's here, like I said triple A earlier. Out of G, one is governance, one C is culture and integrity. This is here. There are a lot of ethical issues we already spoke about, and triple A refers to 1, A is accountability. Who is going to take accountability if something goes wrong, right? And then A refers to assignment of authority and responsibility. That is in the organization structure. You know, there are weaknesses that you can comment. For example, now finance, who is taking accountability, right? There is no finance director. At a board level, accountability for finance remains a question, right? And assigning authority and responsibility, you can talk about it likewise, right. And another A is to talk about attracting, developing and retaining talents. So, this GACA will be very useful for you to remember control environment and comment about the case study issues. And most if examiner asks you to identify any control weaknesses, you can talk, you know, the case study already highlights, for example, fixed asset register weaknesses, one issue already given in the case study. Another issue is impairment of receivable, right. So, why these issues are there, sometimes unseen will tell more about it, but these already you can explain. And specifically internal control over financial report in the group 1, I am not talking of, because this is not given as a group study. So, and also when you refer to this type of area, now you can look at this is auditing standard number 315. Now, I am showing you very valuable note that I have prepared for you when you prepare for the pre-seen and the possible exam questions. One is I have summarized in this, what are the key information where, because unseen examiner has to say something major that is connecting to the story. That major thing also indicated in the pre-seen. Now, one of these things, a combination of these could happen. One is Lalit may wants to sell his shares, right, as no one is interested. The other one, at the same time, Chinese investor may want to buy that share or a controlling interest, and that it may be a joint venture even from financial reporting paper angle, right, you need to look at. But in auditing angle also, what this investment and governance angle. Now, this China investor will say, look here, family business is over now, we want to reconstitute the board and this is our recommendation. And then if company wants to go and list on Dirisavi board, what are the governance requirements, the CEO chairman split, the adequate non-executive directors, their independence, the audit committee, remuneration committee, all of these requirements can kick in. And then the consultant are very likely, they will say you are the consultant and you have to address some of the issues. Now, therefore, I have also summarized from corporate governance and control environment angle, very clear issues that you can see in this question. One is lack of independent chair, right. Manilal is acting both as CEO and chair. If examiner decide to test this and ask you a question like this, what are the explain or evaluate? They see the action verb becomes now evaluate the implications. Evaluate the implication. Evaluate the implication of one person acting both as CEO and chair. Now, say 5 marks or 10 marks. Are you able to answer this question if you are a brilliant student, right. Without the book you will answer, but of course some students will struggle, and if you are a careless student you will write something copy paste from the corporate governance code, where you can say, you know, CEO and chairman at the top of the company, you know, should be the CEO and chairman role should be split. There should be, now I am taking this sentence from the corporate governance code, there should be balance of power and authority at the top of the company such that no one has unfettered power of. Now if you copy paste that, is not the answer. So the answer is that logically what are the points? One is to say both roles are demanding. Having one person is not enough, he will not have time to attend to both, right. One role is managing the business, right, that is the executive role. The other role is managing the board, that is the governance role. These are distinct roles which involve significant time, energy. One person may not be effective doing both. And the second reason is conflict of interest. That is to say, as the CEO, right, CEO's main focus is to look at or focus on business performance, maybe at the expense of other stakeholder interest, right. At the expense means you are thinking about the performance, you are not thinking about the other stakeholder interest, like what? Now if it is a manufacturing company, we can say you are polluting the environment. Now here you can say you are polluting the education, meaning what are we saying here, that we already see there is a failure in quality, right. Quality standards are deteriorating, quality standards, right. So likewise that is the second reason, right. And then third one, I am now, how I am right giving this answer to you? Am I now looking any book? No, but you would have read the study text and at least you remember these words broadly and logically, right. Now in an open book context, right, if you know the page number, you know this is anyway not there in the corporate governance code, right, this is only there in the study text, right. So then if you know the particular page in the study text, you can quickly see these headings, but then what matters is the explanation that you are giving, and logically you should be able to remember these points and explain. And if you bring the case study connection, your answer is very rich, right. So that is what you have to do. So I am not going to discuss each of these, then I will not have sufficient time to give full coverage. And then directors, other information given in the case study, right, these are very valuable information. Directors lack independence and expertise in ensuring the governance process. Now there one is that you will be asked to suggest how to reconstitute the board. There you can say number of directors should be increased, independent directors expertise. The next likely topic is board diversity, right. That is another point, lack of finance and risk management experience at the board level and lack of independent deliberation. I already covered that point. Now to this point on the board diversity, perhaps the examiner will ask you to explain what is meant by board diversity. Then you should be able to say it is the social variance in the board in terms of their age, expertise, the male, female and so on, geographical location, whatever, the nation, the country, things like that. So the female board members not to have. Now if you look at the current board setup, right, they are mostly, now let us say examiner is asking a question about board diversity, right. If there is such a question on board diversity, then your answer should be you should comment on the current board. Right. Now, when you look at the current board, the qualification, all of that, you will see they are very likely most people with econ degree, there seems to be academics, right, and we do not see people who are qualified in finance, maybe even technology, right? Is there a IT director, because this company is exposed to cyber, and in future there is a lot of emphasis on technology, right? The finance, the technology expert, and somebody with Higgs report has also suggested the type of people who should be there in the board, right? Having a lawyer, right, like that. Now currently the board is dominated, right, by the academics who are actively engaged in the business. Other than one board member, Lalit, who is non-executive, the current board family members, and they are having hands, while they have hands-on experience on the university related thing, right, they may not bring outside expertise in critical areas like finance, technology, as well as risk, and even there is no HR director. Where is the input from HR angle? This company is facing lot of HR issues. So therefore, if examiner asks a question about convince somebody about advantages of board diversity, then you should be able to explain diversity brings the talents, diversity brings expertise to the boardroom, and then diversity also break the group think, right? Group think means the people who are similar background, they think in the same way, right? So diversity helps to bring different perspective. And also diversity helps to improve the corporate image of the company, right, and it represent stakeholders. If you diversify to represent everybody, it is a better representation, board becomes a better representation of the society. See, without looking at any page, right, your ability to logically think and build the answer, and that is the key in exam success, right? And then everybody will say after the exam, I didn't have time, right? Now obviously you will not have time if you are well ready and well read before the exam. So that is how, each of these points you should be able to explain as well. Then lack of strategic initiative to address increased competition and aggressive price. So now how can I use this for the case study? Now these points, now all these points, let me to put in a different color. So these points, right. Now I want to make use of these points which are in blue color now. Lack of strategic initiatives to address competition, lack of maintaining minutes, budgetary process is not there, lack of deliberation. Now all these points examiner can ask a question like this. If examiner asks a question like this, what is your answer, right? Question is explain 4 key roles, 4 key governing roles of the board, and evaluate how what is this company how this CBE, right, board has met. Evaluate means your judgment, and how this board has met, has discharged these roles. Now what is your answer, right? Now some students will get 0 marks if you don't understand these 4 roles I mentioned to you in my reading, right? The first role of the board is strategy formulation, one critical governing role, right. Now this evidence from the case studies that this lack of strategic initiatives in the company, that is one evidence that they have failed, right, especially to address the price war. Another information in the case study is that the lack of online digital platform, that is when the business model has not changed, right, to suit the COVID. Now inability to change is a big risk, right. So like that, the how to connect the employees, rebranding, and employees are not supporting rebranding, right. So that is a part of strategy, whole strategy game. Once the strategy is clear, is there a policy framework, right? Is there a policy framework to put strategy into action, right? Or a strategy framework which guide management to operationalize. Operationalize means put into practice. Right, strategies. Right, now see the good, give many example from the case to say that they do not have, policies are not there, SOPs are not there, practices are not standard, right. Now this really challenge. The other one is monitoring role is really failing, and even you can talk about the budgetary process is weak, right, that we found from the case study, and monitoring has failed again. Why? Right, because one evidence for us is that the monitoring process is that the board minutes are not followed up, and then the board no deliberation, right, not no adequate deliberation. That means they are not extensively discussing problems. So, without that, how the board is unaware about the risk facing the company until other people are highlighting cyber security risk, right. So, which means board is blind. So, the board blindness is a big risk, right, the biggest risk that a company can face. And finally, accountability, there you can draw attention whether the right information is given for the partners, other partners, etc. Now, you see this is how you use this board of directors role. And if examine us another question, explain the difference between governance and management. Now, this board seems to be only managing rather than governing. If it is a governing board, they have to focus attention on these 4 key areas, right. So, that is a very important part that I want to advise you. Then the ethical culture, I think I already spoke about ethics. Now, let us come to some of the possible questions, right, that I want to draw your attention to. If now I have just drafted some question for you to reflect upon. You are the senior management consultant appointed to resolve governance and financial issues faced by the college, and you are expected to do a presentation to the board how the current board has failed to discharge performance and conformance role. First of all, do you understand the difference between performance and conformance? Out of those 4 roles, performance role relates to strategy and policy, whilst the conformance role relates to the monitoring role and accountability. If you do not know that, you do not know what this is. Outline current issues faced by the board in relation to 4 roles. I actually explained this answer now. One key recommendation of the consultant is to reconstitute the board and to improve the diversity. Right. So, there you need to discuss, right. Okay, now I have just said, explain the meaning of board diversity, advantages. So, I have already gave this answer to you, and advice Manilal. Now, both these questions we discuss, and remember study text page reference I have given like that. But one thing I am driving here is that your study text remains a critical resource for you to answer some of these questions, but I am also warning, memorizing study text will not help. You should be able to connect case study points, unearth issues from the case study and connect with the study text, right. And then consultant also highlighted that non-executive directors are considered as guardians of good governance and are critical in ensuring board effectiveness. Now, if there is a question, convince Manilal the need of appointing non-executive directors by explaining 4 roles of non-executives. Again, if you are a good student, you should be able to quickly recall, according to Higgs report, there are 4 critical roles non-executives are playing, and those 4 roles are critical for this company. One we already spoke about, strategy, they are desperately failing in strategy, therefore non-executive can bring that expertise to strengthen the strategy setting process. The other role is risk. This company is experiencing major risks, so there has to be board oversight, at the higher level about the risk management. And then the other one is strategy risk scrutiny role. Scrutiny means what? Scrutiny means like checking the executive behavior, whether they are, currently there are things we have to scrutinize. For example, the influence on finance manager, the ethical issues, accounting practices, unethical accounting practices. Those are things that, for example, if there is audit committee where there are non-executives who are independent, they can question. The last role is people. Now again, people role is critical in this company because they are unable to retain people, especially finance and IT people are leaving. And if there is a question for you, I am going to give you some questions so that it makes your life easier. These questions I developed in such a manner to build some connection with the pre-scene. If there is a question, recommend 4 sources of appointing non-executives to the board. That is a brilliant question. This is also from one of the Higgs report recommendation, as well as in the study text, but you may have not read this. Now, one important source, adding lawyers, accountants, we believe that improve the board governance process. One is that they are very structured professionals, and then especially finance expertise is relevant and specifically mentioned in corporate governance code, and they bring valuable insight. Then having foreigner is also important sometimes, because especially if the company is operating in global environment, and this is in this case business school does that, right? And in addition, you can also appoint entrepreneur, somebody from a non-financial background like charitable, because to think about students and the society. So like that, so we recommend, not we actually, these are the possible sources. And if the examiner asks the advantages of NEDs, I mean these are definitely possible questions. Now another thing that I highlighted, this also I covered in my pre-scene, right, factors that facilitate effective board decision making. Now the most important part that we should discuss is control environment, right. So first of all, I already covered this. What is control environment? It is about the governance and management function regarding AAA, attitude, awareness and action concerning internal controls and its importance in the entity. Now, if there is an exam question, now see they can relate this to the audit, assuming that you are the audit partner, the audit is now happening, and then you have been asked to talk about what are the implications of the current issues in the control environment. Now, we know there are many issues. If you apply GECA, the governance, there are issues, the culture and integrity, there are issues, attracting talents, there are issues, right, and then taking accountability, there are issues, assignment of authority and responsibility, there are issues. Now, what are the implications of these issues? Now, that question I am challenging most students may fail to answer, because you know the control environment. So, what is the implication on audit? The answer is, while there are 5 components in the control environment, right, the effectiveness of control environment, if control environment is ineffective, it is going to affect all other components. Imagine if the board is weak, there is no point of talking about information system or monitoring, because the board has to set the tone. Now, when you describe the control environment, this word setting the tone is very important, tone at the top, right. So, if this is failing, all other things will fail. So, one implication that you can write is the control environment. Make sure that there is a culture of honesty, right, and integrity. in other words, when this is not there, the implication is one risk is going to be high and that high risk is fraud risk. Now, you see that is the logical connection, right, implication from audit perspective. The other implication is that it undermines other components, especially when there is no board, there is, I mean, how can we think about risk assessment? Even this company, no risk assessment done, and there are many weaknesses in control activities, information system, we have several issues, right, there is no monitoring, there is no internal audit function. So what is the implication? As a result, auditor may not be able to rely on control, right. Now, this is the answer without any books. Now, if you look at the books, I have extracted relevant section from the book. This part is there in page number, especially now this is what is written in the book, your study text page number, sorry, auditing standard book page number 1116. This is a revised auditing standard, right. Management with oversight of governance, which is the board, has created and maintained a culture of honesty. The first implication, if it is not there, fraud risk is high. Then this is the foundation for other components, and this is weak means it is going to, any deficiencies is going to undermine other components. Then the next thing in the exam, like the previous exam paper, if examiner asks you to explain these 5 components, this appendix 3 in page number, this page range will be very useful for you, right. And then this case study you can definitely explain integrity and ethical issues. I have listed some, the high turnover of the people and the influence on the newly appointed finance manager, change twice, HR, there are a lot of issues with their KPIs, no policies, poor involvement by people, management competence is in question, they do not know about the ERP, they do not want to learn the ERP system, and the information system, there are a lot of issues, you can't generate reliable reports, and then risk management, there are a lot of issues, the cyber security, business continuity, right, and then control activities, again many issues, especially when there is no written policy SOP, it is very difficult to have internal control. The foundation for control is the policy framework. From the policy you can decide procedures, and then you can identify controls. Without policies and procedures is very hard that you identify controls, and we have evidence, the no fixed asset register and the debtors impairment you can connect, right. The other thing that comes to my mind, the examiner can also connect this to audit committee, internal audit, right, and also be aware about there is one auditing standard, Sri Lanka auditing standard 200 and if I am not mistaken 260, anyway the heading of the standard is communicating, right, with those charged with governance, right. If examiner asks what matters to communicate, so be aware about those topics, right. Then the other likely question is evaluate business risk. Now, this part I already explained to you in my overall coverage, I mean when I was going through the study text, but let us go through a few points that I connected from the case study, right. One is change in business model. Now, first of all, I am explaining some of the business risks the company is facing, right. One is business model has changed, new brand and new branding to be done, distance learning module. So, this change may, it may be difficult for the company to adapt to this change may not be successful, company has already delayed, that will affect their ability to be competitive in the market. And the next one, the delay in completion of this building because of COVID-19, as a result they will not realize the expected profit. non-compliance with the regulations or the contracts, and that can create problems. So, UGC can find penalties, can stop them to do the business from the UGC angle, right. So, those things, and then online platform they do not have. So, and I also explained to you if analytical procedure need to be tested, and I said you can use disaggregated analytics because the percentages are given, number of students are given, you can divide revenue by type, courses and developed. And if examiners risk of misstatement, where is most certainly you can comment about revenue recognition, why there is a significant increase, and there is a rebuttable presumption that always you can think revenue is a significant risk unless proven otherwise. And then because CEO chairman say management override and control and fraud has already been reported in the revenue and there is incentive. Now, all of these points can be connected to a para and write properly. The risk you can explain. The fair value I already wrote the answer, and PP valuation also I explained to you, capitalization of borrowing cost, depreciation and loan payment, loan repayment will start now. That is a business risk, right. With the loan repayment there is a business risk. I mean if you take the business risk, for example, inability to serve the loan or to comply with covenants, so those can eventually create going concern related. What is the word we use in going concern? Material uncertainty, right. The intangible asset, for sure there is a greater chance because there is intangible asset already, right. So, what is the issue is that if it is internally developed intangible asset, remember this criteria like pirate, right. There is probable economic benefit, intention to use, resource availability, right, and technical feasibility, economic feasibility. After testing all of this only you can capitalize development cost, especially when it comes to website development cost. You can capitalize, but you need to carefully evaluate whether each expense meet this economic benefit criteria. Then you can also talk about impairment of receivable in your answer as one risk of misstatement. So, like that there are many risk of misstatement. Even I talked about today I mean in this session a new risk like the understatement, unrecorded liabilities, right. Why? Because we find that other income is very low, direct expense has not increased as while there is 32% increase in revenue, right. So, likewise, and in terms of ethical issue, this already given in the case study that the accountant is going to talk to the institute hotline. But the way examiner can ask this question, possible ways, right. One is to resolve ethical conflict, advise the accountant the process that should be followed. If examiner specifically say AAA, you can use AAA, otherwise normal conflict resolution model, right. I explained to you what is the conflict resolution model is that you discuss with the management or the boss or whoever asking this unethical thing and say that this is not acceptable, you can't do that. If he is not listening, go to the next level, and then I mean if they are also not listening, you have to look at options available to you and weigh those options and then do the one that meet the criteria, and finally you may want to resign. I explained to you this. The other one is, now see if they ask a very different question, this is not from code of ethics but business ethics, propose recommendation to influence employee behavior towards ethical issue, right. Now, how do you influence employee behavior towards ethical issue? That is where company can develop a code of ethics, business ethics, and then whistleblower and take actions against unethical practices, things like that. And then this, if consultant has, I am asking another question, if consultant wants to implement a code of corporate ethics, right, explain the meaning of ethics, corporate ethics, and purpose of introducing such a code. Now, if there is such a question, again you should know this is there in the study text, page number 962. And if NOCLA is tested, you should obviously know when there is a NOCLA, your responsibility is to understand the matter. The first one is understand what is the law and regulation that has been violated, right, and then discuss with the management that this is a violation, and then probably you want to advise the management to stop doing this, and if management is not doing anything, you need to take further action, and one of the further action would be to communicate, right, communicate this to those charged with governance, right. So, likewise, you need to look at the possible answers for this. So, now I mean that is how we analyze multiple questions that can come from your pre-scene, but I am always telling you to be open minded, and so that you are preparing to answer any question. So, before I conclude the session, I want to give you some valuable advices, because we know the pass rate for this subject has been very low during past consecutive examination, and I am sure this time you are going to change that, because now you understand the art of preparing, especially for this 45%, and I am sure with the other webinar on the balance part of the syllabus also, you are in a much better position to understand. So, look at these advices carefully. If you want to pass the exam, while there are many big books to look at, the main document that you have to look is before the exam. Maybe you are in last few days, go through the learning outcome like I did today. Each learning outcome, are you prepared to handle that learning outcome? Test 1, right, and then if this is open book, you need to see if I don't want to remember all of this. This has a technical jargon, and you are worried that you can't remember. And if you are such a student, you may want to put a tag that this learning outcome is going to come based on the pre-scene, let's say. Then you need to specifically be aware about that particular page number tagged. Or if you are looking the hard copy, or otherwise you know the exact page number that is there in the open book. So, like I said, pre-scene today in this session, I highlighted most examinable sentences, which will be very useful when you want to connect and write an unseen answer. Be well organized with those points and to be able to connect, and make sure don't see the exam. Usually pressure comes. When pressure comes, your natural performance is going to be affected. Like you can see a brilliant player comes and play at the last moment and struggling because of the pressure. If you assume a situation without a pressure and you are doing this exam from home, so what's the pressure? And if you eliminate the pressure, your performance naturally enhances. And make sure the pages of the study text, if you are trying to read these books during the exam, disaster. You are very likely not going to answer the paper. Read all before the exam, and then what is the most important part for your success? I would like to ask, if there are students physically in this room, I will ask them. Probably answer is what? Everything else is secondary. The most important thing is your confidence. The confidence won't just come, it comes through the work that you have done, and the confidence allow you to remain confident and to write the answer. So, only you can drive your success. So, learn to answer without any pressure. During first few minutes, scan the full paper and decide which questions you have to attend first, and also to have a plan that you are going to answer all the questions. That is very important. Don't depend too much on the book that I already explained to you. And now the danger is, don't copy paste. While you may not be able to copy paste, don't reproduce what is there in a study text or auditing standard book as it is, because you need to connect. So, I am sure this session was useful for you, and I wish you all the best to complete this examination and to become chartered accountant soon. Thank you.